Yo, 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 ladies and gentlemen, what is going on? What is happening? New York fire. What is good, guys? Good to be back. Voice is still a bit croaky, but you know what it is, guys. We're going to bring you that fire today. We've got to have a conversation about what is going on in the charts. I hope everyone is doing well today, ladies and gentlemen. Mad love and respect to everyone passing through, man. What is good, pattern watchers? It's been a while. Yes, let's bring that fire, my friend. We're going to try and keep it in a somewhat controlled environment, ladies and gentlemen. There's a big thing happening over the next couple of days, and we just need to bring everything together and put our senses and focus into what is going to be happening, because there's a lot of fear in Wall Street, ladies and gentlemen. Traders are feeling a little bit concerned. So, ladies and gentlemen, I hope you're enjoying the music. Mad love and respect. Let's have a conversation and bring you that flavor. Here we go. Okay, guys, what is happening? So, to preserve the novelty of my voice so I can keep on bringing you that fire, ladies and gentlemen, I'm going to be going over a few topics today. We'll be bringing you that New York flavor. We've got the New York futures markets opening very shortly, and the word on the street is Wall Street ain't feeling it, guys. They are really concerned. The fears of a hard landing, which is a term they use in aviation when the plane itself has been moving so fast, and then the brake support, it just comes to a halt and it acts as a hard landing. This is the fear that is going across Wall Street right now in relation to the way the Fed is going to be handling this problem with inflation. Word on the street says that there's an 80% chance that they're going to rate the interest rate high. They're going to increase the interest rate by 75 basis points. Word says that there could be a chance of a mad 100 basis points, but that would ricochet the market, ladies and gentlemen, and force the US economy into what we would call that grimy R word, which can't be said anymore, okay? So what we need to try and understand is what is showing us that traders are feeling the fear right now. Okay, in front of you, you can see that Bitcoin has bounced from its lows of the 18,253. If you watched yesterday's video, ladies and gentlemen, in the channel, you would have seen the zones that we marked off, and Bitcoin managed to make that way towards it. Now we've seen a bit of a recovery back up, and it looks like it's a shakeout to absorb all the liquidation points for the retail trader that went short, that didn't pay himself. Before I even continue, ladies and gentlemen, you want to get yourself involved in this game of trading. Do not keep your money exposed for too long. The whole point of this mechanism in the chart, ladies and gentlemen, is to extract money from you so it goes into the pockets of the fat cats. Now, I got no problem with the fat cats, ladies and gentlemen, because they have so well and beautifully provided this opportunity for us to exploit, but it's no good if we leave money on the table. So the takeaway for you, ladies and gentlemen, is pay yourselves moving forward. Not so long ago, ladies and gentlemen, we had a conversation on this video that I'd done, which was Bitcoin and the 3.5% yield problem. I did this on the 28th of August. And in this video, ladies and gentlemen, we talked about the logic of the yield and the impact that it's having on traders right now. If we go over to the yield itself, you will see that it came up and hit that 3.5. That is a problem, because they're already saying that if it is between 3.5 and 4%, then there could be a catastrophic event. This is what Morgan Stanley's saying, all right? They're very good with the key words of catastrophic event, and investors are really concerned. Now, to understand why the yield is rising, it's because there's fear. Traders are seeking safety, which lead us into the idea that the dominance of the dollar is still prevailing to the upside. Bitcoin can't go anywhere if the dominance of the dollar is here and it keeps on moving up, okay? Just look at the chart right now. Dollar is slowly but surely trying its hardest to make its way back up into the red vector candle recovery point in the chart. You notice on the last few videos that I've been doing, I've been helping you guys visualize the principle behind vector candle recovery. And remember, when they recover a particular point in the chart, that's when they start to just falter. They consolidate to try and do the same thing again later on. Here's an example. Look at the dominance of the dollar right here. They've worked their way back up into the red vector candle recovery point, which is an imbalance. They've done exactly the same right here. Now look what the chart's done. It's consolidated. It's traded sideways. Just go down into the smaller time frames to understand the relationship. Look, we've got now another footprint. They're leaving a footprint. So there's another vector zone right here. The principle would have it that the dominance of the dollar would kick in at some point inside of this zone right here, ladies and gentlemen, which would then lead price to coming back up into this range. Where are we right now? We're in the US brink session itself, okay? Now, what is it about Wall Street that is creating this fear? Well, ladies and gentlemen, we have an important news announcement coming out tomorrow. Let's just bring that over for you. As you can see on the calendar, we have ourselves the FOMC and their projections, the statement and the federal funds rate coming out tomorrow. I'm going to be streaming during these times, ladies and gentlemen, because this is where the absolute fire is going to be brought by Mr. Market Maker, okay? Many people are going to be looking to try and trade this, ladies and gentlemen, and that is a problem because a lot of people are going to get shaken out, all right? Traders are scared because of this, okay? Now, coupled with this information, we know that traders are seeking the dominance of the dollar. How can we use this information to go over to Bitcoin and see if Bitcoin is going to reflect that? Well, look at that. Nice drop by Bitcoin. Complete drop to the downside. Doing what, ladies and gentlemen? Coming into the recovery of this green vector candle range right here. Let's just go over to the bookmap for a second. Look at the liquidity right here. They are eating that liquidity down at the lows. 504 Bitcoin at 19,850. You've got to remember, ladies and gentlemen, where they are going right now. They are making their way towards the liquidation points in the chart. Just look at this. The liquidation points right now in this chart right here, we've got $725 million worth of longs getting liquidated at the 18,825. So $725 million worth of longs. And they haven't hit that zone just yet at 18,725. Look at where price is, 18,962, pulling back a little bit. So the liquidation points for those guys are all at 18,725. All right? So let's just round it off. This is the next zone. Where does that lead you towards, ladies and gentlemen? It leads you towards the next vector point in the chart. Okay? This is where they initiate turning points in the chart, ladies and gentlemen. All right? This is where they're running towards liquidity. This is reflecting the fear in traders. Going over to Euro, you can see Euro's taking a nosedive to the downside, fully recovering the vector candles in the zone right here. That's telling us that traders are in fear. NASDAQ and S&P. Now, NASDAQ is already going to have pressure on it in the futures markets because Ford had shown that they've spent $1 billion on inflationary costs. So when you've got heavyweights like this, Ford, a household name in the stock market, trades around 62,200,000 shares a day. Okay? When they're declaring that they've actually forked out $1 billion in inflationary costs, that kind of dictates what's going to happen moving forward, ladies and gentlemen. They're already projecting that in 2023 that their estimates on the earnings per share is going to be down 4%, coming from the fact that in this year, 2022, they hit 30%. Okay? Now, the idea and logic of a hard landing says that the economy recently has been expanding so aggressively. Now, if we go back in the charts of the S&P and the NASDAQ itself, ladies and gentlemen, the last time that the US had experienced an economic expansion in the charts, okay, was back in 2007, 2008, which was what? The subprime mortgage crisis, okay? And every time we have economic expansion, something has to happen. We need a contraction. In this zone, you can see that the NASDAQ and the S&P collectively, they both dropped around 58% during the subprime mortgage crisis. That is what happened, okay? Which then led the inflation rates to the Fed to step in, to give it a hard landing because they needed to slow down things, all right? Price shifts up away from that zone. Global financial crisis, banks getting bailed out, happy days, a reset happened, move back up. Same story is happening right here, ladies and gentlemen, with the S&P, okay? Same thing is happening with the NASDAQ. Now, the NASDAQ reflects the yields. Why? Because if the NASDAQ is dropping in and the yields are rising, it means traders are seeking value-based assets. That's why the fear's coming into the markets. All you need to do, guys, to look at the intraday of fear across the board is to pull up assets against the US dollar. That's going to dictate to you what is likely to happen, okay? Look at Euro USD going down. All right, USD CAD shooting up, dollar yen shooting up. Now, we have got an intervention by the Japanese government, Bank of Japan, sorry, talking about that they're going to look to intervene with this problem that they have with the dollar. Okay, the prospect says that dollar yen could likely come back up into here, so we can future project the value of the dollar, which means the intention of traders seeking the dominance of the dollar, which tells us that there's a good chance that price is going to continue to go down for assets against the US dollar. So what we're seeing now is the build-up before the Fed. If the Fed comes out with the fact that they are going to stick to their 75 basis points, with the future interest rate hikes coming in only between 25 and 50 basis points, because you've got to remember, guys, they can't shock the market with 100 basis points. You want to get rid of inflation? Fine. Increase it by 100 basis points. Guess what you do? You force the country into a recession, and that recession could be a big problem. The goal of the hard landing principle says that you want to curb inflation by increasing the interest rates and then slowly experience a period of stagnated growth, maybe a bit of a recession. But the problem that we've got is if the yields start to invert, there you go, it's going up. Investors are scared, so assets against the US dollar are taking a nosedive. But if the yield inverts, it usually determines that there's likely going to be a recession in a 1 to 2 year cycle. That's what the yield says, okay? Now, as traders across the board, ladies and gentlemen, there are a lot of people going now and buying up Bitcoin, buying up Ethereum. But if Wall Street is feeling the concern and everything is dropping right now, and we ain't even had the FOMC tell us what they're planning on doing, ladies and gentlemen, you've got to be very careful. There's buying the dip and then there's bottom fishing, okay? Buying the dip is on the premise that you're buying a dip in a bullish market. This ain't no dip, ladies and gentlemen. This is a drop into oblivion. Who's buying in oblivion? Now, only the brave and those with capital behind them can really be buying these sort of drops. Why? Because if you're a fund and you have $5 billion and you want to start putting money into the market, you can't put $5 billion at one instance. It's going to take a period of time. So these investors and these institutional fund managers, they project out that in the next year or so, we likely could bottom out, or we could actually bottom out in the next 6 months. So they will project $5 billion into the markets over a period of 6 months, okay? It doesn't happen in one instance. And that's the problem with new retail traders and traders that are coming into cryptocurrency. They think that buying the bottom now is happening. Don't do it. Be careful. Because have you got the capital to withstand these deviations away from your entry point? If you go into the glass node itself, ladies and gentlemen, let's refresh this bad boy. Oh, come on. Oh, no. Please, log in. Please tell me I've got it. Here we go. Here's the glass node. Bring that there. Where is it? Here we are. The glass node dictates that there are traders still in capitulation. So people holding Bitcoin, net unrealized profit and losses of holders of Bitcoin, they are in capitulation. They're giving up. They can't withstand it anymore. And if we go even closer to the glass node, you can see that we've bottomed out once, twice, 3 times with the prospect of it even going lower, ladies and gentlemen. We know they're eating liquidity. We go into the chart right now and see where it's refreshed. Last it was updated was 12:30. Let's just refresh this bad boy right here. What is Bitcoin still doing? Is it still making the move? Here we go. Look how close they are to eating that liquidity. So close to taking now. Where is it? How close are they to that liquidity? They've eaten that liquidity. Now we've got 90 million, but this is quite close on the 12-hour chart. I need to go to the 7-day chart. This is on BitMEX. Let me just change this up for you a second, ladies and gentlemen. Mad love and respect to all you people passing through, man. It's been a pleasure, man. I hope you're all doing well. Going to the 12-hour chart. That's going to give me everything that I need. Happy days. Here we go. There's the liquidity right there. 770 million at 18,850. Below that is 868 million at 18,825. We are close to those zones, ladies and gentlemen. We are very close to those zones. Those vector points look like they are present, and Mr. Market Maker doesn't look like he's slowing down, ladies and gentlemen. Let's see if he's going to bring it. Let's have a look at the book map for a second. We've got the movement happening in the charts. Lots of liquidity coming in. Be very cautious with this. Ethereum. A few traders are trying to pick up orders inside of here. There are quite a few of them are trapped. Quick retrace back up by Bitcoin. What's ADA doing? ADA collecting up orders inside of this. The delta's come up at 726,142 orders of ADA picked up at around the 0.43 mark. Ethereum returning back up. This is what I mean about these sharp plays, ladies and gentlemen, in Bitcoin. Look at that, man. This is what happens when they recover vector points in the chart. What do? They always reverse back up. Why? Because they've just released a ton load of liquidity. Because you've got to remember, inside of this zone right here, ladies and gentlemen, Mr. Market Maker started the initiation to go short. All right? So traders were going long. He's got them trapped. He's only brought price back down to that point because that's where the retail trader has his order. Because below that is what? His liquidations. And we know that from this area here, 18,825. 18,825, smack, right, bang, in that zone. Happy days. That's how you map out the logic of price moving from one point to the next, ladies and gentlemen. Okay? Excuse me. I hope everyone is doing well, man. The problem we've got, is this yield. Investors are scared. They are getting concerned right now. Let's just have a look at Ethereum for a second. Ethereum's taking an absolute bleed in the chart. Look at that. Coming into vector candle recovery points, and we've got a big vector zone down at these lows right here. They've only just come up to only come back down. Now, in my opinion, guys, if the Fed, or should I say, if Wall Street fully absorbs the logic of price now dropping, and they are completely scared with what's going on in the marketplace, principally, they would have priced in the Fed's projections and the fact that we're going to have an increase in interest at 75 basis points. All right? But you can see, man, Bitcoin traders, if you are in longs and you are looking at your entry saying to yourself, man, I've got myself a little bit of a pickle here, try and come away from the idea of fighting with the market and holding, because you're going to pay the price. You are going to pay the price. You do not want to pay the price of being wrong, because it's very expensive. And you know that saying, you know, the price of success is high and then the price of regret is even worse. Trust me, the price of regret is worse, because if you don't close a losing trade and you're just watching it bleed, you can't be irrational, man. You can't. The market can. Mr. Market Maker has prepared this move. Everyone. I bet you yesterday, ladies and gentlemen, I was running on Twitter. I was having a look at what people are telling people to do. You're seeing a few influencers saying, I picked up this amount of Bitcoin. I picked up this amount of Ethereum. Yeah, cheers, bro. Cheers, bro. That's really helping me right now, because everything's taking a nosedive right now. Don't get me wrong, guys. I want things to go back up. But the markets across the board are dictating that everything's going down. The dominance of the dollar is dictating that traders are scared. The yields are dictating that traders are not seeking risk. The NASDAQ is dictating that traders are not looking for tech-savvy stocks. The S&P is dictating that heavyweights like Ford are going to have a problem in the near future. If they're absorbing all these inflationary costs, there's going to be a problem. Traders are seeking safety, and they're not even running to the beauty and the logic of what gold would be like, because this is where they run to. They run to safe havens like gold, but now they're going to traditional safe havens, and they're running to the dollar. But guys, listen, it won't last that long. Remember that. This is just all psychological. Traders are scared. The FOMC is talking tomorrow. They want to put their money into safety. They're already pricing it all in right now. Look at the dominance of the dollar, making a move to the upside. Where's Bitcoin? Let's go. Bitcoin spiked down lower, coming close towards that 1825 right there, man. This is crazy. Look at those traders that were trapped on Ethereum, trapped on Bitcoin, and they paid the price. Where we at? Here we go. What we got down here? 196 orders of Bitcoin, not that many. Violet vector candle looking like it could actually be a little bit of a reversal. New York futures opening in 1 minute time. Not even 1 minute's time. 20 seconds, ladies and gentlemen. We might get a bit of an explosive move here, guys. Sit back and witness the sickness by Mr. Market Maker. He's already started the move to the downside. Please be careful. Be very careful. What's good, guys? Sorry, chat. I haven't been paying attention to you, man. What is going on? You know what? In my opinion, right? The logic of the bottom right now should not even be discussed in people's... It should not even be discussed. All right? Do not talk about the bottom. You talk about movement. Okay? That's how you distinguish. Look at this. New York futures. Everyone now has had orders open pre-market. They're scared. Look what's going to be the impact of this in Bitcoin. Look what's going to happen next. There's liquidity. $758 million worth of long liquidations at 18,825. I will be so surprised if they don't hit it. What's the narrative say? What does it say? It's all about the money. They only care about the liquidity. They're on their way to eating that liquidity, ladies and gentlemen. Look at what's going on. 18,824, 18,825 is $750 million worth of longs. Let's see if they're going to hold it. Those guys are feeling the pain right now, ladies and gentlemen. Dominance of the dollar still going up, guys, and it's not stopping. Wick, they've wicked it. They haven't done it just yet. Is it going to hit that liquidity? $750 million. Is it going to eat? There you go, ladies and gentlemen. Look, oh my days, just missed it. Missed it by one pip. Look at that. Oh my days. Look at how close the market maker gets to hitting liquidity. It's going to hit it. But just look at what's going on. People are rushing right now, trying to cover their bases. Look what's going on. Still not hit that 18,825. This is where $750 million worth of liquidity is going to get hit. Oh, my days. Dollar index is absolutely despicable. Here we go, ladies and gentlemen. One more hit down. Is it going to flush that liquidity? Still not hit that zone. Traders getting in. 488 Bitcoin at 18,800. Is that liquidity going to get hit? Holding. Free. Yippee-ki-yay, ladies and gentlemen. They just tapped it. That liquidity has just been hit. Here we go. That liquidity down at 18,825. Done. $750 million worth of traders just paid the price, ladies and gentlemen. 18,874. Down at that point. 18,825. Sad days. Sad days. And that's on BitMEX. Quickly go to Binance. Oh, man. And you know what, guys? If you're amongst those guys who are long and you didn't pay yourselves, please get with the flavor. 18,825. It was actually nearly $1 billion worth of long liquidations have just been absorbed, ladies and gentlemen. And it's just gone down to only reverse back up. How many of those traders now are feeling the pain and the frustration of trading? Yeah? Had I added a little bit more margin, shoulda, woulda, coulda. You know what? It's the case. It's the life. Coming down into the vector candle recovery point in the chart. Reversal back up, man. Sad days, man. Honestly. It's shocking. It's painful. We just witnessed $1 billion just disappear for them to only try and do it again. You know? This is what it is. First rule about the bottom is you don't talk about the bottom. Listen, some of the best traders out there have stipulated, right, that they never made their career on chasing the bottoms. Blue vector candle on Bitcoin, okay? The next zones of liquidity, now that they've just hit a liquidation point, they've just released just shy of $1 billion worth of liquidity in the market, okay? Now, this is the Brinks box session itself. Remember, the Brinks is all the way up here, but because of the way the indicators work, it's actually this whole zone right here, ladies and gentlemen, okay? Now we're starting to see an influx of orders coming in, all right? This is where New York traps traders, all right? From now until the Fed declares its projections, the markets can do one of two things. This could be the range that Bitcoin consolidates within, all right? 3 o'clock will give you the understanding of that. If they do decide to rip price, just be careful buying it here. Be mindful trying to make buys because it's all based on the dominance of the dollar, okay? As long as this bad boy keeps on going up, people buying is a bad news. Now, if you are a hybrid system trader and you understand the V-shaped play principle that we spoke about last night in the video, then these are the sort of zones that you can exploit, all right? But you've got to be very cautious because the market is treacherous. We're in the Brinks box, so you wait until 3 p.m., ladies and gentlemen, before you actually do anything. Green vector candle can't even get above the 5 and 13 EMA. Now look what happens. Everyone that's just been liquidated is now going to step in and think, you know what? I'm going to try and run some shorts. They just went short, and then they got charged. Look at that. Straight back down. Ethereum, straight back up into that vector candle recovery point to only come back down again. Let me just go into the yields, see how NASDAQ and S&P. S&P's taking that nosedive, ladies and gentlemen. Horrible. Back into vector candle recovery points in the chart, ladies and gentlemen. NASDAQ traders, feeling the pain right there. Still going lower. The fear is installed in Wall Street. Gone above that 3.5% mark. It's a problem. Let me just go over to see Luna for a second. Luna C, because we know this mad coin itself seems to do whatever it wants. Here we go. All right, so this is a very volatile coin, man. Like, lots of speculation behind lunacy and lunacy. It fits. It's such a fitting thing. Going to the 1 hour time frame. Yeah, it's doing okay to hold given the circumstances, but across the board, ladies and gentlemen, you have got the total market cap right now. Everything is taking a nosedive to the downside. All right, so just please be very cautious with your trading, ladies and gentlemen. All right. Now, looking at Bitcoin, guys, what you've got to be aware of is we are coming in towards, what time is it? It's 25 minutes to 3. And we know that the market is going to be preparing for the Fed's discussion tomorrow in regards to the FOMC projections. All right. Please, ladies and gentlemen, try and avoid trading too much. Okay. You can't grab every single move. All right. Now, I want to preserve my voice, but listen, mad love and respect to all you beautiful people passing through to today's live stream. If you are new to the channel, be sure to like and subscribe. I'll be doing a video later on tonight to talk you through on what Bitcoin has done from the New York session itself and how much of the market has absorbed the logic of the market, absorbing the 75 basis points going into the FOMC's projections tomorrow. Ladies and gentlemen, it has been a pleasure. I want to save my voice, and I will check in with you all later on. Mad love and respect, guys. Take care of yourselves. Peace.